Hello and welcome back to Money Talks, and a very warm welcome to Edmung Shing of BCS Asset Management and the Idle Investor website. Welcome, Ed.
Thank you.
You've written for us this week about the attractions of the dollar as a currency investment. What has driven the strength of the dollar against European currencies so much since last summer?
Well, George, it's a pair. So it's always, on the one hand, it's about the dollar. On the other hand, it's about, for instance, in this case, the pound. There are reasons why the dollar has been strong against all currencies, in fact, not just the pound, but euro, yen, you name it, it's been strong. And that's largely because of the strength of the US economy. Clearly, we're getting stronger growth through to the end of this year and into next year. The IMF, for instance, are projecting over 3% growth for the US next year, which will be the best of any of the G7 economies.
We can say that already, can we, about 2016?
Yeah, 2015, 2016, the US is looking particularly strong, and actually UK growth on the other hand should start to tail off a little bit.
So what you're saying is that it's got much further to go, the strength of the dollar.
I think there is a very good argument for that, George, and particularly in currencies, what we do notice is that momentum is key. In other words, what has gone up usually continues to go up for quite a while longer than you could possibly believe, and that's exactly what I think will happen with the dollar.
Surely there are some uncertainties along the way. I mean, the UK general election could throw a spanner in the currency works, couldn't it?
Absolutely, George, but if it does, I think it's much more likely to provoke further weakening of the pound against its other currency pairs, such as the dollar, because there are some big uncertainties this time around. Liberal Democrats clearly are going to see a big decline in support. The UKIP factor is a massive unknown with 16% support. How will that affect the Labour and the Conservative vote this time around? We're not really quite sure. So there are a number of uncertainties which I think in the short term, over the next 4 months, could weaken the pound further.
Okay, so supposing I'm off to New York or to see the Grand Canyon for my holidays, what's the best way I can get hold of dollars? Because, you know, it's going to cost me an arm and a leg just to get hold of the currency, isn't it?
Well, that's right. I mean, if you're not careful, it can be quite expensive. The best and easiest way for most people is actually go to the websites of Tesco and Asda, where you can do what they call click and collect. You can order your dollars online and then collect them at one of the foreign exchange bureau within one of their nearby stores. And that probably is the cheapest way. You get a very good exchange rate and you don't pay for delivery. So that's probably the best way to get your dollars.
I see. So that's for the holiday maker.
Yes.
But what about the more serious investor? I want to be exposed to the US dollar. How do I go about that?
Well, George, I think the easiest way are via exchange-traded funds that buy effectively with your pounds US shares. So the two I've recommended in the article are firstly the NASDAQ 100 ETF, which is again you buy in pounds, but which invests in technology stocks in the US and which has done actually quite well this year, well last year, sorry I should say, and I think will do even better this year, a combination of good stocks and the currency. Or the second possibility is what we call the S&P low volatility ETF, which again takes the S&P 500 but takes the lowest risk companies and buys those. Again, dollar exposure, but also you are buying into US shares which are not so risky, which is another possibility.
Right, so there we have it. Another year, another dollar. And try and get into those dollars and out of poor old European currencies, it seems. So thank you for that, Ed. Look forward to welcoming you next time to Money Talks. And thank you for watching.